Ever wondered how organizations manage their finances, how they decide where to invest or how much to save? Hi, welcome to HCB Global Academy, and today let's delve into the world of financial management, the art of managing money, and other valuable assets of an organization. It is an essential aspect that can make or break the success of any business, irrespective of its size. Financial management is not just about numbers. It's about making critical decisions that can shape the future of an organization. It's about striking a balance between maximizing profits while minimizing risks. It's about understanding the financial implications of your actions and making informed decisions to ensure the sustainability and growth of the organization. At the heart of financial management lie three key decisions: investment, financing, and dividend decisions. Investment decisions, also known as capital budgeting decisions, involve deciding on where to allocate the organization's resources. Should we invest in a new project? Should we expand our current operations? Or should we invest in research and development? These are the kind of questions that financial managers grapple with daily. Financing decisions revolve around how to source and manage the funds necessary to finance these investments. It's about deciding the best mix of debt and equity, the most cost-effective way to raise capital. Finally, dividend decisions concern how the organization's earnings should be distributed. Should profits be reinvested in the business, or should they be distributed to shareholders as dividends? These decisions are not made in isolation. They are interdependent and need to be made strategically, considering the organization's overall objectives and the current market conditions. Financial management also involves understanding and navigating the complex world of financial markets and institutions, from banks and insurance companies to stock exchanges and mutual funds. In the end, financial management is about more than just money. It's about strategic thinking, risk management, and decision-making. It's about ensuring that the organization is financially healthy and equipped to face the future. These decisions form the backbone of an organization's financial health. Organizations do not run on good intentions alone. They need sound financial management. Let's dive into how this crucial element aids in the smooth functioning of an organization. Imagine a ship sailing across the high seas. In this analogy, the organization is the ship, and financial management is the compass guiding it. It helps the ship navigate through the choppy waters of business, ensuring it stays on course. One of the key roles of financial management is budgeting and forecasting. Just as a ship's captain needs to plan the journey, an organization needs to plan its financial course too. Budgeting involves setting financial goals and outlining steps to achieve them. It's like deciding the destination and charting the course. Forecasting, on the other hand, is like keeping an eye on the weather and adjusting the course as needed. It involves predicting future financial trends based on past and present data, helping the organization stay prepared for whatever comes its way. But what happens when the ship encounters a storm? That's where risk management comes into play. Risk management is another essential role of financial management. It involves identifying potential financial risks and developing strategies to mitigate them. It's like equipping the ship with lifeboats and safety gear. Finally, financial management also plays a crucial role in profitability analysis. It's like the ship's log that keeps track of the journey's progress. Profitability analysis involves assessing the organization's financial performance and profitability. It helps identify what's working and what's not, enabling the organization to make necessary adjustments and steer toward success. In a nutshell, financial management is a vital cog in the wheel of an organization. It's the wind in the sails, the rudder that steers, and the anchor that holds the ship steady. It's a guiding force that ensures the organization stays afloat in the turbulent sea of business, making the journey from where it is to where it wants to be smoother and safer. Without effective financial management, even the best of business plans can go awry. Remember, a ship without a captain or a compass is just a driftwood in the sea. And similarly, an organization without sound financial management is like a ship lost in the storm. Just like every game has its rules, financial management too has its principles. These principles are the guiding lights in the often murky world of finance, illuminating the path for financial decision-making. Let's begin with profitability. It's the keystone of any business venture. Without profits, a business can't sustain itself, and financial management plays a crucial role in ensuring profitability. It's about making strategic decisions like where to invest, how to finance operations, and how to distribute profits among shareholders. Next up is liquidity. This principle is all about having enough cash on hand to meet short-term obligations. Think of it as a safety net. If a business doesn't have enough liquidity, it could face difficulties paying its bills, which could lead to insolvency. Financial management helps maintain the right level of liquidity, ensuring the business can always cover its immediate expenses. Then, we have efficiency. This principle is about getting the most bang for your buck. It involves optimizing the use of resources to achieve the highest possible returns. Financial management helps businesses operate efficiently by managing costs and maximizing returns on investments. Stability is the next principle. It's about ensuring the long-term survival of the business. This involves managing risks and maintaining a healthy balance sheet. Financial management helps businesses achieve stability by managing debt levels and ensuring sufficient capital to weather any financial storm. Last but not least, we have growth. This principle involves expanding the business and increasing its value over time. Financial management plays a crucial role in facilitating growth by securing funding for expansion and making strategic investment decisions. So, in a nutshell, the principles of financial management, profitability, liquidity, efficiency, stability, and growth, are the guiding stars in the financial universe. They help businesses navigate the complex financial landscape and make informed decisions that drive success. These principles help maintain a fine balance between risk and return. They are the essence of financial management, the secret sauce that can make or break a business. Remember, a great financial manager is not just a number cruncher, but a strategic thinker who understands these principles and knows how to apply them effectively. The financial world is a vast ocean, with markets and institutions acting as its lifeblood. In the grand scheme of things, financial markets and institutions are like the veins and arteries of an economy, circulating funds from those who have surplus to those who are in deficit. These conduits of finance come in various shapes and sizes, each serving a specific purpose in the broader economic ecosystem. Let's start with financial markets. These are places, either physical or virtual, where buyers and sellers meet to trade assets such as stocks, bonds, currencies, and commodities. They are crucial for a functioning economy as they provide a platform for capital allocation, where funds are distributed to the most efficient and promising ventures. They also offer investors the opportunity to grow their wealth, and businesses the means to raise capital for expansion. On the other hand, financial institutions are organizations that facilitate these transactions. They include banks, insurance companies, mutual funds, and pension funds, among others. These entities play a critical role in managing risks, providing liquidity, and ensuring the smooth functioning of the financial system. Banks, for example, accept deposits from savers and lend to borrowers, thereby enabling the flow of funds in the economy. Insurance companies mitigate risks by pooling resources and spreading losses among their policyholders. Mutual funds collect money from a group of investors and invest it in a diversified portfolio of assets, providing a way for individuals to participate in the financial markets without needing significant capital or expertise. Financial markets and institutions are intricately linked. Institutions participate in markets as buyers and sellers, while markets rely on institutions for their operation. They interact with organizations too, serving as intermediaries that channel funds from savers to businesses, governments, and individuals, thereby supporting economic growth and development. In a nutshell, financial markets and institutions are the backbone of the economy. They facilitate the flow of funds, manage risks, and enable economic activity on a grand scale. These markets and institutions are the platforms where the theories of financial management play out. So, we have taken a whirlwind tour of the world of financial management. We've traversed the landscape of this dynamic field, exploring its various aspects and understanding its pivotal role in organizations, both big and small. At its core, financial management is about strategic planning, organizing, directing, and controlling the financial activities of an enterprise. It's the backbone that keeps an organization upright, ensuring its health and longevity. We delved into the role of financial management in organizations, highlighting how it is not just about crunching numbers and making budgets. Rather, it's a strategic function that involves making decisions that affect the very survival and growth of a business. It's about managing resources efficiently, mitigating risks, and ensuring that the organization has enough funds to meet its goals and objectives. We also took a deep dive into the principles of financial management. From the principle of risk and return to the principle of time value of money, these principles form the grounding philosophy of financial management. They guide managers in making decisions that are in the best interest of the organization and its stakeholders. Next, we navigated the vast world of financial markets and institutions. These entities play a critical role in our economic system. They provide a platform for buying and selling securities, thereby facilitating the flow of funds in the economy. They also help in risk management, providing avenues for diversification and hedging. In conclusion, financial management is a multi-dimensional field with far-reaching implications. It's not just about managing money, but about making strategic decisions that shape the future of an organization. It's about ensuring sustainability, promoting growth, and creating value. And remember, it's not just for the finance professionals. Everyone, from entrepreneurs to employees, can benefit from understanding the basics of financial management. It can help you make better financial decisions, both personally and professionally. Remember, effective financial management is not just about numbers, but about making informed decisions that shape the future of an organization.